Good afternoon, ladies and gentlemen. Thank you for joining us today, and we're very happy to have you here with us. I am Paul Arcenas, SMIC's Vice President for Communications and Planning. We are joined today by an excellent panel of company representatives with the presence of Mr. Frederick Debuncio, SM Investments President and CEO, and Mr. Franklin Gomez, our SVP for Finance. And we invite you all to get in all your questions during the time provided, because this is the perfect opportunity to engage with management.
Good afternoon po. Sir, Ian Saison, Bloomberg. I would like to ask about how the retail business did in the first quarter. Could you give us an indication how sales was like? Is the first quarter pointing to an annualized growth that will exceed the 7.3% growth in consolidated revenue posted by the SM Retail in 2017?
Yeah, we're still closing the books. For the first quarter, we will disclose it on May 9. So as of the moment, we don't have any indication at SM Investments as to how the retail did. We should get it in the next couple of weeks, so just wait for it. May 9, we will be disclosing the first quarter results.
Miguel Ong from AP Securities. I would just like to ask something for SM Retail. What's your plan for your home improvement stores? Will the entry of IKEA result to possible store cannibalizations?
The IKEA is only leasing a space, so I think that is still under discussions. So it is not part of the retail group.
I think we're sort of following also the direction of the government in terms of the priority projects. And, as we know, the plan is to really increase the growth of the economy nationwide, even in the Visayas and Mindanao area. So far, it's been limited to the National Capital Region and Luzon as far as the concentration of the business. And that's one reason why we got into, let's say, the logistics space, right? To be able to be part of that growth of the economy moving forward. So that's one example for that. And then the other one, which we did recently also, or last year, was the investment in the office dormitories, because we do believe that there's going to be continued demand for those kinds of sort of residential, short-term or temporary residential housing for office workers. So that's another area. So, more or less it's in those areas that we're trying to focus on and see really where there's synergies with the rest of the group to be able to sort of accelerate the growth trajectory for these businesses.
Hi, Darcima, Philippine Daily Inquirer. Aside from investing in logistics, what are other initiatives aside from investing in logistics are you doing to prepare for the eventual for what could be the retail Armageddon happening in the Philippines?
Well, I'm assuming when you say retail Armageddon, you're talking about possibly the e-commerce space, right? And that's an area which we believe it's still early stage, but it will eventually happen. So at this point, we continue to explore which or how we can actually get involved in the e-commerce space. We have some that we're doing in-house and through other sort of market players like Lazada and Shopee. But that's one space which we're trying to learn more of. And we're definitely focused in terms of looking at opportunities in that space.
Good afternoon, sir. I'm Jerome Morales from Reuters. Sir, maybe ask what's the group-wide capex for SMIC and any financing programs this year or refinancing, and what platforms are you looking at? Thank you.
We are looking at about between 75 to 90 billion of capex. The largest chunk of that would be SM Prime. So SM Prime mentioned yesterday that they'll be spending in the vicinity of around 80 billion, and plus minus 5 billion within retail and some of our banking capex as well.
Do you have plans to improve the public float of China Bank to make it more attractive to other investors? And are there plans to bring SM Retail to public hands?
As Mr. Ricky Debuncio could attest himself, because his grandfather was a founder of China Bank, we have very loyal stockholders, so loyal they refuse to sell their shares. That's why our liquidity is less than $100,000 a day. Having said that, in 2014, we amended our Articles of Incorporation to remove the preemptive rights of stockholders so that at some future date where new shares can be issued to new shareholders. So that opens up that possibility.
As far as SM Retail, there's no plans at the moment.
So just follow up on my second question, the financing program for this year, or refinancing, debt refinancing that you're looking at for this year for the group.
Oh, our financing is, as we said, most of our capex are financed by internally generated cash. SM Prime has an excellent cash generation machine, and whilst their capex are increasing, their internally generated funding is also increasing. So we would expect funding externally to be maintained what is historically what the group has been taken the last couple of years. Unless, of course, there are significant big projects that will be undertaken, and that would require separate financing strategy.
Sir, hi. Cliff Benson from Nikkei. I'd like to ask about the retail segment. There was probably that was a blip for last year, the 1.7% drop in net income. Can you elaborate more on what exactly happened in that area? And my second question is still on retail. How did your recent dealing with the antitrust authorities affect the conduct of M&A or the prospects for M&A with respect to the retail side?
Just on the first question on the 1.7% drop in retail net income, it's just because of a one-off taxation that we just had to settle last year. It was an unusually quite a few open years were settled last year, much higher than the normal closures that we would have. So it's just a timing difference, and I think that should put it. We can put that behind us and then move forward with growing the business. On your second question about what was that again?
The recent dealing we had with the Philippine Competition Commission, we think that's really just a one-off event. We don't believe it's going to have any effect in the way we do our business and in terms of our expansion and growth plans moving forward. Well, we will continue to look at opportunities out there. Obviously, what makes sense for the group.
Warren De Guzman, ABS-CBN. I'd like to ask, I understand that the group has a new data arm, and I wanted to know how you might be using this in terms of your retail operations, or how do you plan to monetize that actually moving forward? And will the data arm be accessing data across all business segments?
The data that we have is just within the group. We're not selling anything. This is just to improve our the things, the services and the products we offer to our customer. So it has nothing to do with selling any data.
Likha Cuevas from Riger Market. One of the fastest growing growth areas is FNB or FMCG. Is that something that, well, FNB with you looked at Goldilocks, but has that diminished your appetite for such investments? And how about FMCG?
FMCG customers are more actually, personally, I view them more as a customer, right? Because they're one of the biggest customers, for example, for our logistics arm, and also obviously for our supermarkets or our food group. So I don't think that's an area which we're interested really in getting into as an actual owner of an FMCG business. I think F&B, again, it's really more a tenant to our malls.
The country is going to open the telecom industry to a major third player. And based on the reports that have been coming out, is that the idea is that the telecom company from China is going to be partnering with local companies. and it could be local telco companies, the small ones, or it could be conglomerates. And so, to get to the point, will the SM Group, SM Investments, consider, if the opportunity comes, to invest in a group that will become the third telecom player in the Philippines?
I think the telco industry is something which we really don't understand. Yeah, but still, in terms of operating, running, what the issues are, it's difficult for us, right? So, and we're very concerned about the amount of capital that will be required in a telco as well. So we'd rather be involved in businesses which we are more familiar with, where we could grow together with our partners and really have synergies with the rest of our group.
If we follow that thinking, then you wouldn't have invested in logistics, right? It's also something that the group is.
Well, but in logistics, there's more of a synergy effect because of our nationwide footprint as well, and the breadth of our retail business.
How would it make sense, or for SM to invest in this third player? What would be the considerations so that it will make sense for SM to pass the hurdles that you are looking at?
To be honest, we haven't really looked into that. So it's hard to say like what our minimum hurdle will be.
Thomas Wang from BDO Nomura. Thank you for the briefing. Actually, just one question, the guys. Since you mentioned that internally funded most of the funding, and in the absence of any potential M&A, is there a chance that the company may revisit the 30% dividend payout? May increase the dividend payout if there's an absence of M&A opportunities?
Increasing dividend payout will always be in the horizon. However, given that all our subsidiaries are in the growth mode, everybody needs investment, and we have a fairly conservative approach to our balance sheet. So we want to make sure that they're adequately funded via equity, and by that, by the retention of the profits, is actually funding them by equity. At the same time, we're also borrowing from outside, and that allows us to maintain a conservative balance sheet, because I guess we are in a country with volatile economic history, so we want to make sure that we don't over leverage our balance sheets and take advantage of the opportunities during the good times as well as the bad times.
Okay, with that, we want to thank our panelists, the rest of our leadership, and everyone else for your participation today. Have a pleasant rest of the day. Thank you.